Sounds good. Whoops. All right, can everybody see that?
Yes.
There we go. All right, hang on just a sec. I'm having a little bit of a keyboard issue. I need some keyboard repair on my Mac. Apparently I hammer my keyboard. I've got some cracked keys. So I think at least some of you have worked with us quite a bit and are familiar. For those who are not familiar, what is SCORE? We are an I should say almost all volunteer organization. We have over 10,000 volunteers nationally, most of whom have outstanding experience in business. And we are mentors, volunteers who help small business owners. We are mentors, subject matter experts, workshop presenters. And that's kind of what we do. We have 10,000 volunteers nationally, as I mentioned. We have about 300 locally in Connecticut. And nationally, we used to say 350 chapters. We need to update this. We're probably down to 250. We've done some consolidation over the last couple of years because it seems to be more effective to group some of our smallest chapters into somewhat bigger clusters. But we've got 6 chapters in Connecticut, if that matters to any of you. So much of what we do now is remote via Zoom anyway, that it almost doesn't matter. But as we start doing more face-to-face stuff, it sometimes matters to people. So Steve and I are both with Greater Hartford SCORE. And like I said, we have 5 other chapters in Connecticut. So our agenda for today, we're going to try to do a quick flyover of starting a business. And Solandi, you've already done it. I'm not sure about the others. Ed, you're at least thinking about it. May have done one before. I don't remember. But we thought we'd start with a few common misconceptions. And second, we thought we'd jump into a sort of a self-assessment. Is this a good fit for you individually? Some of you are already committed. You've decided. But if you haven't, it's a good time to think about it. Defining your business idea, your concept, testing that idea, and then understanding the business environment. What do you need to know? Understanding your financials. Again, what do you need to know? And then we'll talk a little bit about business and marketing plans. And that's typically where startups end up spending a lot of time working with SCORE. And finally, some tools and resources that we hope will be useful to you. So, this slide used to be called common myths or something like that. So the question is, are these true or false statements? There's no right answer to this, but let's just take a few of them here. You don't need a big cash reserve to be successful. What do you think about that? Is that true or false? Starting a business, do you have to have a pile of cash to get started?
I do not believe so, but it would depend on the business, I suppose.
Yeah, I mean, I think that's the secret right there. It depends on the business. There are some businesses that are very capital intensive and others that are very capital efficient. And if you get a capital efficient one, you don't need a big cash reserve to get started. You have to get it right every time. Is that true? Are you allowed to make some mistakes here and there?
Well, I think you learn through the process, you know, of, I guess, changing. If you're looking at your numbers on a regular basis, you're making changes based on data, based on the information that you're gathering.
Yeah, I think so. I think most of us sometimes feel like we learn more from our mistakes than from our successes. And as long as you are able to course correct and stay on top of things, I think you said that very well. Successful entrepreneurs do it all themselves. Is that true? Anybody found that to be true?
I don't want to be doing everything myself right now, but 3 weeks in, I kind of have to do everything myself and then figure out, you know, how to, you know, hire the staff that I need so that I can continue to grow the business, you know. But right, I guess in the beginning, yeah, you're kind of setting up and doing everything yourself, and then over time you need help.
There's the voice of experience right there. You said all that very well. I will add nothing to that. How about this one? It's easy to get financing for a great idea. Has anybody gone through that process or is going through it right now who can offer commentary on that?
A long time ago, I went through that, and it happened to be when computers were fairly new, and this was in computers, and I had no trouble getting financing. And finally, we went public in the Connecticut state, and money just kept coming in, but the business never did do well, and it folded eventually. But getting financing for a current good idea seems to be not easy, maybe, but it seems to happen. As I understand, Amazon went a long time on borrowed money.
Yeah, I think, Ed, your experience from a number of years ago may not be very typical. A lot of small businesses we work with say it's actually very difficult to get financing as a startup. It's much easier to get financing once you're a couple of years in and have proven that you can start and grow a business. But when you're just starting and you've got a PowerPoint and an idea and nothing else, it's pretty hard to get somebody to fund you. There are exceptions to that. And I think you may have hit one where you had something that was able to capture people's imagination. That's been true in some technology fields, for example. If you've got a great idea and you can convince people that it's scalable, you can sometimes get people to back you, either with finance, with loans, or with investments. But it's not very common.
No.
After a year, you can relax and enjoy the profits. Has anybody had that breakthrough? Yeah, I think we don't know many businesses like that. In fact, I don't know any, but we do get people who come to SCORE and say, I'm looking for a passive income stream. I want a business that will let me do exactly what this says, put some money in, start a business, and sit back and have the checks come in like an annuity stream. Those things do exist, but they're not easy to find. They tend to be expensive. Sure, if you buy a McDonald's franchise and hire a good manager and can manage to, sure, or a Subway, something like that, but they're expensive to get into. That's a pretty unusual thing. Most business owners say they work harder than they've ever worked in their lives. One of the guys who's a client of mine says he works 70-hour weeks, and he's a third generation owner of a business, and he's 30 years in. So he's not relaxing and enjoying the profits yet, though he says it is very profitable. You will have more freedom, control, and work-life balance. Those who are entrepreneurs finding that that's true?
I can tell you the last 3 weeks, I have never worked this hard.
Well, Salandi, you're not the only one. That's pretty common. Successful business owners often tell us, and many of us have had that experience ourselves. They've never worked so hard in their lives to make things work. So, however, you are captain of the ship, right? So if there's something that's not working right, you can decide to try something different. So yeah, you will have more control. You may not have more time. What about the last one? Starting a business is risky. Is that true?
Yes.
Anybody think otherwise? I guess I'd throw out it depends, the classic consultant answer. I should have introduced myself. I've been with SCORE John Sundin for 4.5 years. Most of my career was in management consulting with a heavy technology focus. I was a partner at Accenture. So that's my background quickly. But starting a business is risky. It does depend. I have a SCORE client who is a couple actually who are independent truckers. And they don't feel that there's much business risk in what they're doing. It's risky driving a truck over the road all the time, life and limb. But the business side of it, there's so much demand right now. On the other hand, they typically take out loans to buy their rigs and they invest in their business. And so if the market turns and all of a sudden it's not so easy to get work, there's risk. So anyway, it depends very clearly. Whoops. This slide potentially is out of place, but I think it's still a good place to start. Your role as a business owner, there are so many things. I mean, ask Salandi what her to-do list looks like right now, 3 weeks into a new business. On the other hand, if you step back and say, what is really critical? What am I trying to do? There's a famous old consultant, some call him the father of consulting, Peter Drucker. former business school professor. He's now deceased, but has written quite a few books on management, things like that. He said the key responsibility of a business enterprise is to create customers. The goal of a business enterprise is to create customers. And the two things that are essential to doing that are marketing and innovation. And I think that's an interesting perspective. We're not going to debate that, but the things that are at the top line here, core to your business, kind of fall into what Drucker would include in marketing. It's designing whatever it is you're going to sell, to whom you're going to sell it, and figuring out how to continually delight your customers. He would put all that in, acquiring the customer and call it marketing. And the innovation is how you keep that fresh. Hiring and cash management arguably fit there too, because that's how you're going to survive. But all these other functions here, they're really not core. They're very important. They can keep you out of trouble. They can keep you solvent, or you can get in trouble if you don't do these things, but they won't help you get that next customer. So they can keep you from getting the next customer. So I think one thing to think about as you get busy and stretch thin is focus on the core and figure out where you can get help on the other stuff. And at the beginning, you're not going to have employees, but you may be able to contract bookkeeping, things like that. So we won't dwell on that, but it, I think, is useful to remember that you need to be focused on, getting your next customer. So we thought we'd start with assessing yourself. And again, if you've already committed, you've done this. But if you haven't, if you're thinking about it on the outside looking in, do you have the background and support to do this? Your personal experience, you have experience in whatever it is you want to do. Do you have family support? If you have family members who are going to be counting on the income from your enterprise, are they behind you? Do you have the right level of risk tolerance? I've worked with clients who have been employees of a business for 20 years and now have the opportunity to buy the business. And they say they've looked at all the financials now that they have an opportunity to buy it, and they realize that they're going to be making the same amount of money afterward as before. And they asked me, what's going to be different? I said, well, are you taking on any debt? They say, yeah. Okay, well, there's some risk there. How is your risk tolerance for that? Now you have to take out a big loan to buy this business. Before you were just getting a check. So you need to think about that, but that also gives you the opportunity to create growth and things that you couldn't really do before. Do you understand your strengths? Do you have the resources? What are your goals? The last one here, I think, is pretty fundamental. We get some clients whose business goals are to change the world. I'm working with one like that right now. She thinks she's got something that could we ask you guys to go on mute? Those of you who we don't see. Thank you. I have a client now whose goal is simply to change the world. She thinks she's got something that's really fundamentally will have impact in certain types of childhood education, early education. We have others who say, I want to make a living and I need to make a living with this business. And we have others who say, I'm just pursuing a hobby. So it really is important to understand where you are in that continuum, because it makes an awful lot of difference as to how you proceed. And again, part of the self-assessment, what are your life priorities? I just talked a little bit about that. Can you work independently? There are some people who are SCORE clients who really want to be captain of their own ship, and there are others who they're not so sure. I mean, they're used to showing up 9 to 5 and being told what to do, and that's not the way it's going to be when you're running your own show. Do you love what you're doing 24/7? If you're starting your business, you're probably finding out right now if you do. Can you sell? For most businesses, the independent truckers are kind of an anomaly right now. Finding that next customer is the ultimate responsibility of you as the CEO when you're starting out, especially before you've got a sales team. Does financial uncertainty upset you? Most business owners, by the time they're 10 years in, certainly have been through at least 1 or 2 significant downturns in their business. And they will tell you that it created significant uncertainty. I have a good friend who split off from the company where he worked as a technologist and started a consulting firm with a partner, and they grew it to 30 people, and the financial crisis hit in 2008, and they had to cut their staff to 15 to survive. And he said he didn't pay himself for 3 months. so that he could pay the remaining 15. So, these are things most business owners go through if they're in business long enough, and you have to understand, are you set up to handle that? Vacations, sick days, benefits, things people really negotiate for when they're taking a job. You're the one who decides what can happen. So I think if you're first time in starting a business, just think about where you stand on these things and then think back to the goal. Are you out to change the world? Well, you might be willing to put up with all of this stuff and say, I can have a big impact. But if it's just, I'm trying to make a living, you have to make a decision. Is this a better living than what you're doing now, if you have a day job? So again, on the assessment, just looking at your financials, if you're just starting out, can be pretty important. Look at how much you spend right now, look at what you have in savings, think about what it's going to take for you to live for, this says 6 to 12 months. I'd say at least 12 months. We're not talking about it yet, but we will. That one of the things you're going to want to do is you put a business plan together is do some projections, some financial projections. What's my first year or two in business likely to look like? As Yogi Berra said, making predictions is hard, especially about the future. You're never going to get a good forecast that everybody's going to believe for your financials. On the other hand, you can pretty well predict that for most businesses, it's going to take a little while to break even, to become cash flow positive. So you want to understand your own financial situation and understand, can you survive that? Do you have enough cash to pull you through the first whatever it's going to take until you're cash flow positive and making money from your business and making enough money from your business to cover your requirements? And then also, what else can you put into your startup? Do you have retirement savings? Do you have other collateral? It's not on.
Johnny, still there?
Unusual. Can't you hear me, Steve?
You broke up for a second on my end.
Okay. Everybody else okay?
You broke
Yeah.
up.
So understand what you can put into the deal, I guess is what I would say. Bankers often say the cheapest funding they can give a startup is a home equity line of credit if they have equity in their home. So just understand what your capacity is in that regard. Any questions about any of that? This is all just assessing yourself, assessing your readiness. We call it going in with eyes wide open. It's a really exciting time when you're starting a business and you want to make sure that you are in a good position to succeed. All right, topic 2, defining your concept. This is, what's your big idea? And we often say, start with thinking about who your target customer is, your target client, perhaps if you're a consulting business. Who is it who will be the beneficiary of what you do? How much do you know about them? Their demographics, their age, their location, the whole deal. And how well do you know them? The most successful business owners are often people who know their customers better than anybody else. And I think that's pretty important. What problem are you going to solve for them? So do you have a solution for some problem that is significant enough to people that they're going to buy it? People who invest in startup businesses sometimes say there are 2 types of risk in startups. One is market risk. You don't know if anybody's going to buy this thing or this service. And the other is execution risk. You don't know if the owners of the business can pull it off. This is about market risk. Is this problem for these customers significant enough that people will pay to have what you do? And then what are the features and benefits of your solution? So, the wording here is interesting. I think features attract, benefits sell. A feature is what you do. Our car has anti-lock braking. The benefit is what the customer gets. You can stop on snow and ice without spinning and sliding. What will let you differentiate your business? Who are your competitors, and what will let you differentiate your business from them? So we occasionally get score clients who say, well, I don't really have any competitors. Well, you need to think about that more carefully, because pretty much every business does. Even if you're really unique, there's usually something that others do that can be a substitute for what you do. So I think it's important, even if you think you've invented a new category, to think about, well, what are the options? What's the option that my target customers would have as opposed to doing business with me? And that can help you understand who those competitors are and what you need to do to outcompete them. Because really that's the game that you're going to be in. How does your price compare with theirs? How does your capability level compare with theirs? How does your product set, service set, whatever it is, put yourself in the customer's shoes. How are they going to choose? And then value proposition. I think most of you have heard this term before, this phrase, but it really gets down to what you're selling, what are the benefits to your customer, and why would they buy from you? So you want a succinct statement. Companies usually or often turn them into a marketing slogan. That is a brief statement of value. It often combines who's the target customer, what problem you're solving for them, and sometimes even includes in it the competition and why you're better, faster, stronger. It can be very important to have that figured out because that's what presumably is going to make the difference for your customers. And here are some examples. I think these are two examples of brands that are very, very well established, that people have an image in their mind. These words may or may not be exactly the way you think of them, but you have a concept of the value that both of these companies provide. So, and here's some other examples, but a lot of it is, what are people going to think of when they think of you and your business? So again, these, one could say are the big four questions for getting started. I would say that by the time you've given a careful, thoughtful, precise answer to these four, you've gone a long way toward outlining a business plan. And then a lot of the rest is getting down to projecting things that are very hard to project, that you're going to find very valuable to think through. But one that's missing is, you say, who is my target customer? We haven't asked how you're going to connect with them. That's a big part of what your marketing plan is going to be. Understanding who those customers are and how to connect with them. But we'll talk a little bit about that down the road here in a minute. And then any questions so far? I think most of what I said is kind of okay, but it's really just, again, going in with eyes wide open and being aware of what you're in for. So how would you test a concept? I mean, some of you are already in. Solanda, you're already into your business. You're testing it as you go. What else can you do? So, one obvious possibility is market research and understanding more about who your target customers are and who your competitors are. We've talked about some of this. Where can you get this kind of information? Well, an awful lot of it's on the internet. The one other plug we'll throw out is, by the time you get in, and here's a list of other sources, SBDC down at the bottom there, Small Business Development Corporation, like us, they are another SBA resource partner. They have a library of subscription data sources that are fairly expensive to get if you want to subscribe to each of these things. And their licenses allow them to share them with their clients. So you can go to SBDC. They have a location actually near Yukon, and you can call them and ask if you can get in and use some of their resources. So that can be a very efficient way to get access to very detailed market data that is hard to get otherwise. And
I have a question. What does SBDC stand for?
Oh, I'm sorry. I thought it's Small Business Development Corporation.
Oh, okay. Thank you.
Yeah.
Okay.
So they're a little like SCORE in that they provide mentoring, workshops, resources, tools, things like that. The difference is we have 10,000 volunteers nationwide. They have a much smaller group of paid staff. And their focus is a bit different than ours. We will take all comers. Anybody who comes to us with a business idea or a business, we're happy to help. They say they will do that too, but their preference is companies that are hitting their growth stage. So they've already made it through the first 2 years and they're now ready to try to secure some financing to grow to the next stage. However, because they've got this resource library, it's worth checking in with them if you're having a hard time finding market data and you could use some resources that require subscriptions, you may be able to benefit from theirs. And they have some very good mentors, as we do.
I have another question. I think one of the struggles that I'm having right now, because I'm getting a few phone calls and people want to, I prepared a fee schedule for the services that I offer.
Hmm.
But the fee schedule that I prepared was based off of only a handful of, um, resources that I have. So my former employer, I was the one that had developed the fee schedule and decided what the rates were going to be. I had strong, from my two employers ago, I think I had a strong idea as to what they were charging based on some calculations that I made. And then I asked two colleagues, and the two colleagues that I talked to, they don't have the level of, I guess, expertise or credentials that I have. So they're charging way, way under, which I think is making them, I suppose, very competitive with the rates, but underpaid. And they're smaller agencies. They're even, I guess they're in a different, I don't know, they're different, their their goals are different, I guess, than mine, right? And I'm having a hard time how to, I guess, get this information. I don't know how to get the information with regards to rates. Would the SBDC be able to provide, because it's such a small.
Yeah, they're worth a try. That's a great question, Sandy. They're worth a try. And I will tell you that the question you asked is a difficult one for most businesses to figure out their pricing. And many adjust it and tweak it and tune it. And it's easier, I think, with a product than with a service like yours, and especially with a complex service like yours. So I don't know that there's a magic answer, but if SBDC has market data that will help you, I don't know the answer to that if they will. They have very granular data on many industries. I don't know if they will have it for yours. I would imagine it's hard to collect that data in your industry, but I don't know.
Yeah, and one of the things, I mean, I'm at a conference right now and I'm a little shy about, you know what I mean? Like, it's just I've
Oh,
never
sure, I get it.
asked
Yeah,
anyone,
yeah.
hey, how much are you charging for your services? I've usually worked in places where I know what they charge, but I didn't see them doing, I guess it wasn't part of their market analysis. I was just sort of helping them, with what made sense. And I saw that people were paying. I basically went just slightly under what they were charging on my fee schedule. And then I was going to test it out. And if I got responses like, oh my gosh, and I lost business because of it, then I'd probably adjust again. I don't know what the best, I guess.
Well, yeah, and I think it's easier if you're selling widgets to adjust on the fly. I think part of the challenge for you, which is probably why you're thinking so carefully about it, is that you start to establish your reputation as a service provider as soon as you start providing service. And you don't want to be moving your rates all over the place, in the first year or two. But you probably will find that you have to adjust them. You may have to start a little lower than you want to, and you may be able to ramp them up as you get stronger demand. On the other hand, as I'm sure you already mentioned some you think are underpricing. If it's not enough for you to make a comfortable living, then you got to figure that out. But one of the things that's really common in consulting is to have different tiers of service, so to speak. And the blue chip firms are always charging a heck of a lot more than what we used to call bottom feeders. So you have to figure out where you are in that. Are you after rock bottom pricing to scale, and that's what you do, or are you after a premier service? And figure out where you are in that continuum. And I don't know enough about your specific business other than what you just told me. So it's hard to figure out. I don't know if SBDC will have that data, but it's worth a try.
Yeah, I'm trying to, when you put up that item on the screen, I kept thinking, oh my gosh, if this data is somewhere, where would I get it?
Yeah, I mean, you'd be a very specialized area. It's not easy for some to figure out where the pricing information might be. And some of it's going to be word of mouth from conferences like you're at right now. I'm sure you said it's difficult to have those conversations, but try to do it. Right? Especially if it's not somebody who's going to be a direct competitor, the other side of the country or something.
Thank you.
Any other questions or comments on that? How much money do you need to get started? So this is part of the testing your idea here, because so we occasionally get a client who comes in with a very big, change the world, grandiose idea, but very, very little capacity to fund it and very unrealistic expectations about what might be possible. So, I think it's important to know what type of business you have in terms of its capital efficiency, I'll call it. Manufacturing businesses tend to require a lot of capital to get started. On the other hand, independent consulting businesses, in principle, it's, not much, right? It's whatever it's going to cost you to live until you have a client base. And there's a continuum there. Buying restaurants can be fairly expensive. One of our SCORE volunteers' husband owns a restaurant, and she's a banker, and she helped him apply for the loan to buy it. But, I think she said it was a $300,000 loan. And that's a fairly significant commitment for somebody just starting a small business. So, but that's not unusual. So I think it's important to understand where you are in this and how much capital is going to be required. And that in and of itself is enough to change people's thinking about testing their ideas, so to speak. Any questions about that or comments based on experience? So
I
just
do have a question.
Yeah.
So I have the capital piece, the financial capital piece. There are, from what I've sort of gone and researched and believe it or not, walked in and like called banks and said, hey, can you meet with me? And it's really, really difficult for you to even get an appointment with a bank that is going to lend you the money for startup costs. When you have when you know that you have some, so I know Steve, you and I talked about this, where's your skin in the game, right? And I'm like, all right, I have an update on that, Steve. I have skin in the game now, but presenting that to the bank, and someone who's actually going to say, sure, yeah, we'll talk to you. I probably walked in, called. If they don't call me back, I actually walk in, request to meet with them, 5 different banks, and only one was willing to have a conversation and was excited about what I was doing. But it was honestly, it was after, I was able to show that I had some skin in the game. So I guess, what do you have any sort of like other suggestions as to how we can prepare for those discussions?
Yeah, and Steve, I'm sure will have thoughts on this, and he's going to talk a little bit more about financials as we go forward this morning. But 2 things. One, if you already have a banking relationship, that's a good place to start. If you don't, then you start shopping around. 2, it's very hard to get a loan, a business loan as a startup. Because banks like to see a track record. They're going to underwrite the loan. They're going to have to make a decision. Is this a good risk? Is this a good bet for us? And so they're going to look for evidence that you are a good credit risk for them as a business entity. So if you don't have a track record in business, they're going to look at you as an individual. Are you a good credit risk for the amount of money that you want to borrow? They'll look at your credit score. They'll look at your income tax returns for the last 3 years or whatever to see how much income you reported. They will look at your personal resume and expertise. Do you have the expertise to do what you're doing, even if you haven't done it as a business owner before? Those are all things that I would think would help you quite a bit, without going through your details. But if they already know you because you've been a long-term banking customer, it's easier to get that discussion going because they can look at your business check. Well, you don't have business checking statements except for the last, I think you said 3 months, but your personal, they can look at that stuff. The other thing you can do is sometimes you can't get a standard business loan from a bank, but you can get an SBA backed loan. You understand the difference? The difference is the SBA will back the banks who do give SBA loans. So they insure the loan, I think 75% or something like that. Steve probably knows. So the banks are sometimes willing to make an SBA loan to somebody they wouldn't make a loan to without the SBA backing. Well, the SBA's website has this wonderful little feature called Lender Match. So you can go and you can click on Lender Match on the SBA's website, and it will ask you some questions, and it will come up with potentially 2 or 3 banks you should talk to. So they can help you pre-select. Now, they may not come up with any, in which case you're going to have a hard time. So there was something about the information you provided, and I haven't actually used it. I don't know if anybody on this webinar has used it, but the idea is that it will help you in your search. Now, Steve and I, Mahoney, our co-presenter today, and I worked with a client who said that he had approached 20 banks who said no before he found one who said yes for a business he was discussing with us. Now, he was going out for a big loan. He was looking for a $3 million loan to buy a building and change it. But he said he talked to 20 banks who said no before he found one who said yes. So it's not easy, getting a loan to start up. And they will, if you don't have a track record in this business, they will look at everything about you that might position you to be successful. They want to make the loan. They just want to get paid back. Does that make sense? But yeah, it does take time. You may need to talk to a few folks. And the other thing that's out there, we'll see this in a minute, but there's a kind of a continuum of lending sources, and it goes from, your standard business loan from a bank is usually the cheapest interest rate for a business loan. Bankers will usually tell you, though, if you have equity in your home, it's cheaper interest rate to do a home equity line of credit and use that for your business. That's cheaper yet. They will say an SBA loan will be the next least expense, next most expensive, next least. Both ways are true. And then above that, there are community lending organizations like CEDF. So CEDF, I think it stands for Community Economic Development Fund, is a local resource. I think they're probably national too, but we have a local one, and they make what are called SBA micro loans. And so they're specifically loans for $50,000 and less typically. And to reduce the risk for any individual bank on any individual loan, they usually get a group of banks together and they say, okay, these 3 banks will go in on this loan. And so they each have a less exposure to the risk of it. And that's what CEDF does. And they're able to get loans for some businesses that have not qualified for either traditional business loans or SBA loans. Although they are a form of SBA loan, they're an SBA backed loan also, but they're doing some extra legwork. You will, in addition, pay an additional interest rate for that also. So as you go up this scale of more support and resources, you're paying extra interest for that support that you're getting. Does that make sense? But it's hard. There's no question. In figuring out how much you need, in this list, I think, we have tools and templates that can help you do this, startup expenses. But it's something important to really think this through, because we occasionally work with a client who's been in business for a year and significantly underestimated these expenses. And so thought they were well positioned to survive the first year. And now they're 9 months in and they're in difficult situation financially because they underestimated their startup costs. They overestimated how much revenue they would get from their business at the beginning. And they didn't realize how quickly they were going to go through whatever they had saved. So it's important to really put these projections together in terms of what your costs are going to be. It's harder to project the revenue side, but you should be able to project the cost side pretty well if you're thinking carefully about it. And again, we have tools and templates that can help you with that. And I didn't mention it until now, but I mean, get a SCORE mentor if you don't have one, because the SCORE mentor can, help point you to the right tools and resources and help you think this stuff through if it's new to you. What are your financial resources? Well, we were just talking about bank loans, but what else? Well, most startups are bootstrapped, meaning they're self-funded by their founders. So it's your personal savings, it's your access to credit, including your home equity mortgage, line of credit, family and friends. They say most startups are funded by the 3 F's: founders, friends, and family. Crowdfunding is out there. If you've got a story business, you might get, so that's free money. That's not an investment, but some businesses do get a few $1,000s. Some get more because they have a story that hits a nerve and, people will fund it. Think about, do you need to buy property? Do you need to, or can you lease? Can you do things to reduce your cash outflow? Can you use credit with suppliers to help you? Can you get favorable credit terms for your first year? We talked about the bank loan line of credit. Outside investors is the bottom of the list here. Anybody know why? I added that this morning. We had taken it off because it's such a long shot for most of the startups we work with. Whoops. Most of the startups we work with are just not good candidates to get outside investors. Typically, you hear about angel investors and venture capital. They're looking for companies that are truly scalable, that have explosive growth potential. So think technology startups, think software companies in particular. They're very scalable, and software in particular is very capital efficient also. So they love those if it's something that they believe in and they think the founders have the right stuff to be successful and the right idea. But other than that, I mean, there are occasional stories where, somebody who's been really successful in a restaurant will decide to invest in another restaurant, something they know and understand, or something somewhat similar. So sometimes you can just through your personal network or your industry network find people like that, but it can be difficult. It can be very difficult. We had a lacrosse facility, athletic facility, one of those indoor inflatable tent things that was partially funded by a very successful restaurant owner because he got to know the people who wanted to start this business and thought it was a good bet. So we talked about this. I mentioned this. This is just kind of a graphic illustrating this. I think TD Bank put this together, if I remember right. But obviously, if you can get grants, which are very, very hard to get for a startup, but they typically go to nonprofits who are already proven to be very good at what they're doing to hit some objective, whatever the grant's objective is. But for businesses, they're typically very hard to get. Borrowing from yourself or others, most common. Conventional banking loans, again, the next most expensive. And SBA guaranteed loans, a little bit more expensive in terms of interest and fees. And then this CDFI loans, this is like I mentioned CEF as an example of that. Be careful with anything beyond that. This alternative lenders, as soon as you start shopping for business startup financing, you will start seeing ads all over Google for people that say they will get access to capital for you. Those are typically very expensive and difficult people to do business with, and be very careful. It's a jungle out there. So, you use them in the sequence here shown, and just realize that the reality is it's extremely hard to get funding for a startup. And we talked a little bit about this, but these are typical lender requirements. They like to see 2 years in this business so that they can say, okay, you've done this for 2 years. We can see what your results are. And there's enough income here to support the loan payments. Barring that, they're going to look for as much evidence as they can get, as much as they can get, that you can support this. And one of the big ones here we talked about is having a good credit score, having business knowledge that's relevant, having cash flow. If you've got another source of income, if you've still got a day job and you're starting this on the side, well, that cash flow is very relevant. Collateral, again, we talked about a home. If you own a home, that's great. And then any personal investment money you can put down. So those are the key things. The lenders also, they talk about the 5 C's. Character, well, that sounds interesting, but typically their key measure of that is your credit score. What they mean by character is, do you have a history of repaying loans? Capacity, how much capacity do you have in your personal savings and your personal income to fund a loan? How much capital do you have on hand, again, to draw down if things get difficult? Are there any unique conditions in your industry or in the market as a whole? Are we heading into a recession? Are we coming out of a recession? Is your industry growing? Is it contracting? All those things matter on, of course, collateral. If you're willing to personally guarantee a loan and you've got the resources to do that, you will probably get the loan. Makes sense? Any questions about that? I know we went through that fairly quickly and we get a lot of questions about this, but again, go in with eyes wide open because it's just not easy to get loans for a startup, which is why bootstrapping is the most common approach. For some businesses, it's easy, meaning the ones that don't have a lot of startup expenses. And the other advantage to bootstrapping, think about it this way, it's the lowest risk way to start a business in a way, because if you borrow $50,000 to start a business and you go belly up at the end of the first year, you still owe $50,000. You're in a big hole now. But if you bootstrap the business, you're paying as you go, and you're testing your concept as you go. And with some businesses, you can do that. You don't need a pile of cash to start. So especially if you don't have a pile of cash, that's the kind of business you want to start. Any questions or comments on any of that? We've had some people who just joined, and so you've missed some, but we're not going to go back over things. But if you have any questions on what you've heard, I'd be happy to answer them. Otherwise, I'd like to turn it over to my friend Steve, who's got a lot to say, and I took too long here. So,
Okay. Hey, John, can you stop sharing so I can share my
I
screen?
will do that.
And for those of you who joined late, we are recording this session and we'll send a link around so you can hear some of the things that you missed. Can you see my screen okay?
Yes.
Okay, great. All right, so we're going to talk next about what we're calling understanding the business environment. So we're going to hit on some, financial, some legal, some insurance topics next. I'll just, say my background is in finance. I've been with SCORE for about 2 years. So needless to say, I'm not an attorney, so don't consider this official legal advice. I'll give you some of the advice that we give our clients as we're going through these things, as we talk about some of the legal topics. So one of the things you're going to want to do in the early stages is think about forming a legal entity. There's different types. I'm going to go through each of these in a little bit more detail. To the extent you've got, a complex business set up, multiple people involved in the ownership of the business, you might want to consult with a lawyer about this. But if it's a simple structure, you could do a lot of this stuff on your own. And basically, the choice you're going to make on the kind of legal entity is going to be driven by the things we know here, which is, the type of business you're in, the capital structure, and where you think it's going to go in the future. The first one you may hear a lot about is called the sole proprietorship. This is the simplest structure. It's pretty easy to form. You're basically just doing everything yourself. It avoids this concept of double taxation, which is really an issue for large corporations, not for small businesses. The one watch out with a sole proprietorship is that there's no inherent liability protection. Now you can get an insurance policy, which we'll talk about in a minute, to help mitigate any liabilities. But if you just do this, you hang a shingle out and you're doing this as a sole proprietor, you don't have a liability protection. And you kind of just report the income, along with any other income on your tax return. A lot of businesses who do the DBA concept, which is doing business as, if I'm Steve and I have Steve's accountant shop, or Steve's CPA firm, that might be my sole proprietorship, doing business as that business name. A more common structure that we see with businesses is a limited liability company or an LLC. If folks are just starting out, we generally recommend that they go down this route first. It's in the name, it provides some liability protection for you. Basically, what it does is it shields the assets of the business inside the legal entity such that your personal assets are not at risk because you're basically limiting, things inside the business structure. It avoids that corporate double taxation concept I mentioned earlier. It's very quick and easy to form. You can basically fill something out on the state of Connecticut website, apply for your LLC, and set things up, and you're ready to go. There's another concept that folks sometimes talk to us about when they're forming a legal entity, which is the corporation. And I'll talk about that here. There's really two types of corporation. One is what's called a C Corp. These are your large organizations. Any of your publicly traded companies that you read about, they are generally going to be C Corp companies. They've got shareholders, they've got governance committees, board of directors. Very uncommon for a small business to set up as a C Corp. Sometimes a business will establish themselves as an S Corp, or they'll be an LLC and choose to be taxed as an S Corp. An S Corp concept is sometimes appropriate. If you're just starting out, you don't necessarily need to file as an S Corp. There's a little bit more administrative responsibilities you need to have with an S Corp. You've got to have a formal shareholder structure. You need to have officers, you need to have formal meetings. The tax treatment of an S Corp and just a plain old LLC is pretty much the same. The business profits of an LLC are taxed to the people who own the LLC. They're called the members or the owners. They pay the taxes on the profits of the business. So LLC, generally what we recommend people do when they're just getting started out. Sometimes you'll hear people talk about partnerships, and there's different ways to think about this. One is if you have an LLC and you go into an LLC with somebody and you say, we're going to be 50-50 partners in this. You may own the LLC 50%. You're basically members of the LLC is the legal term for it. You could also have a partnership agreement, which would be more common for things like law firms or accounting firms. Sometimes you'll see that they're going to be limited liability partnerships or just general partnerships. Not that common for someone who is just starting out. Regardless if you're going to have a partnership structure or an LLC, the most important thing to think about is if you've got someone else going into business with you, is to have an agreement, an operating agreement, whether it's a partnership or an LLC, especially if it's 50-50. It can be really challenging if there's ever any disagreements between the two people about any critical business decisions. A lot of times people don't think about this when they're just getting started. They get together with a friend, they both have a great idea, and let's say, let's go into business together 50-50. What ends up happening down the road is if you come into disagreement about who's responsible for doing what parts of the business, if one of the business owners decides they want to sell and the other one doesn't, if you've got a 50-50 ownership structure and you have no agreement that documents decision rights, operating structure, it can get kind of messy if you've got to get attorneys involved to separate it out and figure out what to do. The other thing that can happen is if the business dissolves, it goes out of business, or God forbid, one of the members passes away. So recommend highly, if you're going to go into something with somebody 50-50, get an attorney involved just to draft up a simple operating agreement for those key decision rights.
Steve, could I ask a question? In
Sure.
Connecticut, if you are an LLC, is there any fee except that yearly, I think it's $20 or something? Is there also a fee, more fees than that because you're an LLC and doing no business at all?
I think it's pretty small, Ed. I think it's you have a one-time registration fee and then there's an ongoing renewal fee, but it's very nominal, which is one of the benefits of the LLC. Just to have it as a structure is not very costly.
Okay, thank you.
Mm-hmm. So the other thing here, these are what are called kind of little details, and just some important things to think through. I would say that the more important ones are getting a federal EIN. This is an employer identification number. You can get this through the state of Connecticut website. And that website is, we'll have it later in the document as well. It's business.ct.gov. It is a great website that has got all sorts of information. We refer a lot of our clients to that website to get some questions answered. You're also going to research any sales tax requirements for your business. You can do that on the state of Connecticut website. We're going to talk about that in a little bit as well. And then license applications. Some businesses you're required to be licensed and some you're not. And you can get that through the state of Connecticut website to determine based on the nature of your business if you have to be licensed to operate in the state. And then we talked a little bit about financing earlier, and we'll talk about financials a little bit in more detail, but highly recommend that folks get a separate business account, a business bank account. You want to keep your business and your personal financial details separate from each other. That's just really important to do that. And then here's just a host of regulations. Not all of these are going to be applicable to you. We just talked about licensing and approval. Depending upon what kind of business you're in, you may need to worry about zoning laws or building codes. If you've got a brick and mortar operation, if you're just operating out of your house, you probably won't need to. You may need to worry about, fire safety, labor laws if you've got employees. The ones that I recommend people really look into immediately are the licensing, the sales tax, and then just understanding Social Security withholding for you and your employees based on the nature of your business structure. One of the things you're going to hear us talk about is having a team of advisors. An attorney and a CPA are good people to have on your team to keep you in compliance with all of these things. Any questions before I move on about all these legal concepts? I know I went through that kind of quickly. Okay.
I have a quick.
Was there a question?
Yeah. So when you're planning to open like a convenience store, is it advisable to open an LLC or to open like a different kind of incorporation? Or
Yeah, I would say it depends on a handful of factors. I mean, you can start with an LLC for a retail operation. I don't think there's anything holding you back from doing it that way. If it's just you as the sole member, I think that's fine to start. As the business grows, and I'd consult with a tax attorney. I'm sorry, a tax CPA to understand if there's any nuances in your business structure that might give you different tax advantages. But I think that's probably an advisable way to get started.
okay, thank you.
You're welcome. All right, so insurance. This is another on the short list of things that we talk about with our clients as they're just getting started, is to research any insurance needs. There's some that you're probably going to need, upfront, which is really in the general liability space. If you're in the services business or you're selling a product, property might be applicable if you've got a physical location. If you've got a business where you're delivering things to clients, you might need, and you've got a vehicle that you're using for business purposes, you might need to consider auto insurance. If you've got employees, you got to get workers' comp. That's a requirement by the state. And then to the extent you're going to provide any benefits like health or life benefits for yourself or your employees. One that has come up a lot recently is cyber. Most folks will think that this isn't applicable to them, but if you're getting any sort of customer information, sensitive information, if you've got a website, you could be susceptible to a cyber risk. And it's worth checking out to make sure you've got appropriately safeguards in place. You might not need insurance, but you can check out some good tips on safeguarding your data and that of your customers and suppliers to make sure you're not putting yourself at risk for that. We actually did a webinar on this a couple months ago that's on our YouTube channel, the recording of it, which is pretty insightful by a gentleman who runs a consulting firm that does this for a living. It was pretty eye-opening for me, at least. At the end of the day, this is going to depend on your business. If you're running a restaurant, you obviously need to worry about liquor liability. If you're doing consulting services, you might not have some of these be applicable. Best advice we can give you is if you've got a company that you use for your insurance today, talk to them about a business insurance policy, see what they recommend based on the nature of your business. They can give you some good advice. You can also consult with local insurance agencies who work with small business owners. We've got one that we work with that we refer clients to called InsureGood. They're an agency in Hartford that helps small business owners. So good to at least check that out. And then last topic on this section is just thinking about a team, right? And we talk to our clients about this all the time. We've got You're going to want to have a good relationship with a banker because you never know when you're going to need banking needs, whether it's your basic operations or a loan. Have a business attorney for when you need to think about either setting up an entity or contracts with customers or vendors. Having an accountant, this is going to cost you money. And when you first start out and you're savvy enough with your taxes, you might be able to handle it yourself. But as things get more complex, it's worth pursuing, talking with a CPA who can help you out. I generally tell my clients, I'd rather have you spend your time working on refining your product and service and keeping your clients happy than researching the tax code. It's something that's worth paying a few dollars as an investment to have your CPA worry about that for you. Got your insurance agent, of course, a score mentor, as John mentioned earlier, can be a part of that team for you. Business peers. This is one where, to the extent you have other small businesses who are in your physical geography or in the same space as you, it's good to understand with them what's going on in the environment. It might be tough if they view you as a direct competitor. But if they're in a space that's kind of tangentially related to you, but not a direct competitor, it's good to develop those relationships as well. You can learn some good best business practices around that. And then in terms of trade organizations, local chambers of commerce, the SBDC, not really a trade organization, but kind of a good resource, the CEDF, as John mentioned earlier. Basically thinking about these team of professionals providing expertise in areas that might not be in your wheelhouse. You're an expert in your business and service you provide to your clients. These folks can help you with that general business environment and complement your skill sets. Any questions or further thoughts on this topic before I move on? All right, so we're going to talk about financials next. So I was going to jump in earlier when Salani was asking her question, but I figured I would keep it for this section because I knew I was going to be talking about this. These are just some key financial concepts you'll want to understand, and you don't need to be a CPA to manage your finances, but you want to have a good understanding of your numbers. So it's going to help you make informed business decisions. This is something I help clients with all the time. If you need help with managing your finances or planning your finances, this is something a lot of us in SCORE can help out with. Anytime you're looking at your finances, it always starts with revenue and pricing. And there's this concept that we talk about in finance called pricing elasticity. And basically what that means is if you think about a rubber band being stretched, you've got on one side, you've got what a customer is willing to pay for your product or service. On the other end, you've got where you need to price your product and service to make a good living. Your competition is going to be on that as well. There's basically this tension that is naturally being pulled on that rubber band. And if it gets stretched too far in one way or the other, it's going to break. So it's important to find that sweet spot of where's the competition? What do you need to price your product and service at? If it's too high, you're going to drive away customers. If it's too low, it might not be enough for you to sustain your business. And what's the customer willing to pay? So all of those aspects are constantly pulling and tugging at each other. And you settle in kind of where that price point is. As John mentioned, when Salani, you were asking your question, it is very tough to figure this out. If you've got a product that is apples to apples that you can look at and touch and feel, it may be easy to say, yeah, these are the exact same thing. Let's compare prices. If you've got a service, it's a lot tougher because there could be nuances to the service you're providing. John mentioned kind of a premier service or more of a tiered service option. Salani, you mentioned maybe some of the qualifications of the people who are providing that service, right? If you can point to a competitor and say, wait a minute, they don't have the same qualifications that I do. I've got more experience. I've got more certifications. I've got a deeper team of people. Any way you can differentiate yourself and the service you provide to help justify that higher price point will help in selling, but it is not easy. It is very difficult to do. And you may find that you're going to have to experiment in that pricing based on a whole host of factors and what you're trying to do. So it's challenging. It takes some give and take, especially when you're getting started in a little bit of trial and error. And in sometimes, there's this concept in here called cost plus model, which might be, if you were selling a product that might be it cost me $5 to make or buy this product. I'm going to do certain things to it and sell it for 15 because I want to make $10 per unit on it. That might be a cost plus model. Service model is a little bit different because it might be more of a function of what you're going to be charging per hour based on the time you're going to spend. Does that help, Salani, and kind of thinking through that concept we talked about?
Yeah, I think that it does help. I'm right now questioning, just because I've have the knowledge from other providers, but your point to, how do you or your service, how is it differentiated? I mean, that's the easy part, for me at least, because I do have additional credentials, and the folks that I'm competing against are at a, let's say, master's level, I'm at doctoral level. They have 5 years experience, 20 years experience, so I can easily do that. But at the same time, I don't want to take the risk of turning people off that could be potential clients, where it's like, I'm thinking, all right, can I pick up and I'm just making these numbers up, can I pick up a contract for, $3,000 because my rates were so high and that's what they were willing to sort of commit to, or can I lower my rates by $25, let's say, okay, per hour, and now I just picked up a $15,000, $20,000 contract. So I'm almost inclined to decrease by $25 yet again, right? Because I decreased by $25 because of my last experience and what I knew they were getting for me, my service. But now I'm looking at maybe even bringing it down a little bit further. I don't know.
Yeah.
I'm like talking out loud, but it's really, really hard. And what I don't want to do is, with a new business, I don't want my rates to be so high, especially since my business doesn't, the brand doesn't have the reputation yet. I do. My name is the one that has the reputation right now. And I think I just need to sort of figure that out.
Yeah. And one more thought on that one. You're thinking about it the right way. But another thought that we talk to with clients about sometimes is, when you're just starting out, to get those clients in the door to help build some recognition and maybe even some referrals, is to offer like introductory pricing and call it that. That way they know they're getting a deal up front, so that if their pricing is going to go up in 6 months, it's not a complete shock, or 3 months, whatever. Or sometimes if they're in the consulting side, saying, hey, we'll offer you a free one-time consultation just to do kind of an assessment of what we can do for you. So a lot of times you got to do those things up front just to get a few customers in the door. And then that can help snowball and get some name recognition and some referrals going. So those are just some other ideas. Just some other financial concepts on this page here. If you were making a product, cost of goods sold would be the concept you'd hear there. Different cost structure. If you've got variable costs, these are usually tied to revenue volume. So if you are paying people to help sell your product, maybe you're giving them a commission, that's going to go up or down based on your revenue. That's an example of a variable cost. Fixed costs, or sometimes called overhead. These are the things that are going to be there no matter if you have 0 sales or a ton of sales. So your rent, your utilities, your insurance. If you've got an assistant in your office who's going to be there helping you regardless if you sell anything or not. It's important to understand the fixed and variable costs of your business, because one's going to stay relatively constant and another one is going to basically go up or down with your revenue volume. Profit margin, this is the concept of revenue minus expenses, how much you're making. And we're going to talk about the different financials now as we go forward here, the different financial statements. So the first one is called the balance sheet. This is, I call this a snapshot as of a point in time. It's basically taking a picture of your business as of a certain date. So for this business, you've got this company called Classy Company. It's a business as of December 31st. Here are everything that's on their business balance sheet. So you've got the assets on the left-hand side of the page. This is what you own, or what people owe you. If they owe you money for things that you've sold them. Liabilities are at the top half of the right-hand side of the page. This is what you owe to other people. And then equity is what's called your company's net worth. The reason it's called a balance sheet is that the balance sheet balances. You can see at the bottom, the formula is your assets equals your liabilities plus your equity. So you can see in this example, we've got $910,000 of assets, and the sum of liabilities and equity is also 910,000. So just quickly, I'll walk you through kind of everything that's on here. You can see the assets over here. You've got the businesses got their cash. They've got some short-term investments. Maybe they've got some CDs or some investments in some stocks. Accounts receivable, these are monies that are owed to you from customers that you've sold business to. They just haven't paid you yet. You might have inventory in stock for things you haven't sold. Prepaid insurance is where you paid your insurance in advance, and that's going to be an asset to you. Here you've got other investments that you might have. Longer term assets are things called property, plant, and equipment. This would be if you've got a physical location and what the value of that is. Goodwill is something that's really applicable if you bought another company. I won't go into too much detail on that. On the liability side of the page, this is amounts that you owe to other companies or other lenders. So accounts payable would be if you bought something from a vendor, but you haven't paid them yet. As of this date, you might owe them $80,000. You've got other, you can see here if you owed interest to the bank. You've got your the current portion of your loan. Let's say you owe your bankers. In this example, they've got $40,000 of current debt, which means it's due within a year. They've got more debt over here. You can see another, couple $100,000 of debt that they owe over here as well. And this business has $450,000 of total liabilities, and they've got total equity of $460,000. The way to think about the equity of the business is, mathematically, it's your assets, liabilities. So it's what's called your book value. Sometimes it's called your net worth. It's also basically the sum of all the money you've put into your business, plus all the money your business has made in profit, minus any money you've taken out, like if you've taken an owner's draw out. So that's really what the equity of your business is. So as you're assessing the business financial statements, a lot of times somebody will say, all right, how much do they owe? How much do they own in assets? How much do they owe to other parties? And then what's the net worth of their business? That's kind of a good snapshot to see how the business looks financially. I know I went through that kind of fast. Any questions on the balance sheet?
This is something that your CPA can help you set up, correct?
Yes, and
Okay.
if you're keeping your books and records in something like QuickBooks,
Okay.
or any sort of financial software, you can run a balance sheet report that will show you your assets and liabilities and your equity. Ed, are you asking a question? You're on mute. Or John, looks like you were saying something.
Yeah, I was going to say, if you go after a bank loan, they will probably give you a template to prepare a personal financial statement that'll be like your personal balance sheet too. They'll want to see what this looks like for you before starting your business, but they'll give you a form for that.
Ed, if you're asking a question, you're on mute. Can you unmute yourself?
Lower left corner of your screen.
There you go.
Yes, I've been asking questions.
Sorry.
No, I don't understand, first of all, why anyone would think that the assets should equal the liabilities. But they do. But,
No, they don't. I'm sorry to interrupt you there. They don't. The formula is your assets equal the sum of your liabilities plus your equity. So
it's the equity that makes it come out.
So in this example, they have liabilities of 450,000.
Mm-hmm.
They have equity of 460. The sum of those two is 910, and they have 910,000 of assets. So it's
and if I found out I had another loan and I went up to 500,000 liability, my equity then would go down. Is that it? No. Yeah.
No, if this was your balance sheet and you got another loan tomorrow for $50,000, your cash would go up 50,000. So your assets would go up 50,000
Oh,
and your liabilities would go up 50,000. Your equity wouldn't change.
okay. What if your accounts payable went up by 20,000?
If your accounts payable went up because you bought something or you expensed something, then yeah, your accounts payable would go up and your equity would go down, because that would base your equity is a function of your profit. So if you bought something, or let's say you paid your a vendor for something and you had an expense on your income statement,
Mhm.
that would impact your equity.
I understand now. Thank you.
Yep. Okay. All right. So the next financial statement is the income statement, or what's called the P&L. The P&L stands for profit and loss. If you hear any of those terms, they all mean the same thing. The balance sheet is as of a point in time, but the P&L is over a period of time. So you'll always see it's for the year ended, or for the 3 months ended, for the month ended. It basically says what happened during the current month or the current year in my business. And a P&L is going to tell you a few things. It's going to give you your revenue. It's going to give you your cost of goods sold. It's going to give you your operating expenses. And when you subtract all of those out, it's going to give you your net profit. Now, your P&L or your income statement is going to look very different depending upon your business. If you're a retailer or you're making product and selling a product, you're going to have cost of goods sold. Like, this is a retailer, so you can see they've got revenue at the top, and they've got the cost of how much that inventory took to sell. And then they've got what's called their gross profit, which is the difference between the two. And then you've got the expenses to run your business, which is pretty much any business is going to have expenses to run their business. If you're a services business, you're probably not going to have cost of goods sold, because your revenue is going to be your how much you're charging your clients, but you're not selling a product, right? You're selling your time, you're selling your service. So an income statement for any type of business, if you look at any of the public company income statements, they can all look very different depending upon the industry they're in. So to John's point earlier about what a banker is going to look for, income statement is going to be a very important financial statement they're going to look at, because they want to see, are you making money or not? And again, Solani, to answer your question, this is another output report from QuickBooks that you would get from your financial software. The last financial statement is called the cash flow statement. This is basically, it is kind of as it describes it. It's money going in and out of the business. And when your cash flow coming in is greater than the money that's going out, that means you have positive cash flow. And it's just the opposite. When the cash flow going out is more than what's coming in, you've got negative cash flow. So it's not overly complicated. It's probably, people ask what the most important financial statement is. It kind of varies based on the question you're trying to ask. If you're trying to say, is my business solvent as of today and what's my net worth? That's the balance sheet. Is your business, am I making any money? If your question is, am I making any money? That's the income statement. If your question is, how's my cash doing? Do I have enough cash coming in the door? That's the cash flow statement. And when you're just starting out, cash flow is probably the most important thing to look at. When I'm working with clients, this is a thing that we always talk about, is doing cash flow planning and cash flow projections. And it's because when you're trying to start out, you can go through a lot of cash very quickly, and it's tough to manage that cash when you don't have any revenue coming in yet. The cash flow and the income statement are very similar, but they're not exactly the same. The income statement can have some nuances related to things like depreciation, that on fixed asset purchases that could be a little bit different in terms of the cash flow. But I always tell folks, focus on the cash flow statement first, because that's going to tell you your liquidity and how long your business can last, and what you're going to need to fund that first, couple years of operations.
If you bought a piece of equipment, would that make the cash flow go down, even though you had assets improved?
It depends how you financed it. If you finance that with cash, then yes, that's going to impact your cash flow and right away. But if you finance it with a loan, it doesn't impact your cash until you pay that loan off over the course of the 5 years or so that you financed it for.
I see.
So just in terms of managing your accounting needs, there's some different small business softwares that are out there. Here's a few that are out there that you can research. QuickBooks is very common. I've had a few clients who've talked about FreshBooks being a good one. You're also going to want to look into, you could either have a desktop version or a cloud-based version. The cloud-based one is nice because it saves it out on the cloud for, and you can access it pretty much from everywhere. In terms of if you do this yourself or hire a CPA or an accountant, it really depends on how complex your business is and if this is a strength or weakness for you. If you don't know anything about finances and you want someone to really help you with, talk to an accountant, talk to a CPA and see what kind of services they offer. But if you've got a good enough understanding of it and can manage it yourself and your stuff is just starting out and it's pretty low volume, you might be able to do it yourself for a while. So it's really kind of a key question to ask yourself is if it's a strength or weakness for you.
Steve, I have another question regarding searching for a CPA or accounting, a bookkeeper. I'm on my business is going to be a little more complex. There's going to be a lot sort of hiring of staff. And so I don't think I'm going to be able to keep up with it. I know I won't. That I have decided. What type of background or experience am I looking for a CPA to have? And is it better to go with someone that has a bookkeeper that, on staff that they can use, and maybe even like I'm thinking ahead, I'm at this conference right now and I'm learning a little bit about, potentially finding somebody that can help with some of those evaluating, putting in place those internal controls. And I'm just curious, like, I have not yet explored who I'm going to be using. So what would I be looking for, I suppose, or the questions I can ask when interviewing them?
So yeah, it's a really good question because as you're researching accountants, you're going to want to understand there's two different things. A lot of times people just think taxes. And yes, there's somebody you want to have who will handle filing of your taxes and all that compliance stuff. But there's also the bookkeeping and record keeping aspect of an accounting services firm. So what you'll want to understand is what services they offer, how they provide those services. Sometimes businesses will just, they'll have a QuickBooks application that they access and they do certain things in it, and their bookkeeper will also access, and your bookkeeper may do certain things. The internal controls thing is really important because as your business gets bigger, you have more employees, you've got money moving around. You want to have the right controls in place to understand the flow of cash. Sometimes what businesses will do is when they're just starting out, if they are hiring a staff of people, they may hire somebody who's, depending upon how big your business is and how many people you have, part of that job may be handling some accounting responsibilities. The internal controls aspect of that is important. So you may say, a quarter of this person's time is going to be handling accounting responsibilities. Or you may find that, certain things are going to be done by strictly the bookkeeper. So I think meeting with a bookkeeping service and describing them what your business is and kind of how much volume you think you're going to have, they could probably help steer you in the right direction in terms of services they provide. That's probably the way I'd recommend going.
What are those accounting responsibilities that I'd be looking for, I suppose?
Basically recording receipts of cash, disbursements of cash. If you've got employees, you're going to want to handle payroll. Sometimes you may hire a payroll service to do that, or sometimes you'll handle it yourself. Kind of going the back and forth with your CPA in terms of the records that they need for doing the taxes. Those are invoicing clients, paying vendors, basically maintaining, we're going to talk about record keeping in a second, basically maintaining your books and records so that you've got one official source of all your financial records. Think about it with like anytime, it's basically follow the money. Anytime there's cash moving in or out of the business, you want to have a handle on it so that you always know what your cash position is. So record keeping, I know we're running up against the clock, so I'll try to go through this stuff pretty quickly. And if folks have to drop, you'll get a copy of the recording link sent to you afterwards. But these have been some great questions. Record keeping is very important when you're running your own business, not just for tax purposes, but also thinking about having customer data, list of your customers and all of their contact information, vendors, any contracts that you have. It's important to keep it all, keep a paper trail, find a record keeping system that works best for you. Of course, you've got this nice cartoon at the bottom here, the tax man always cometh. It is important for tax purposes. You want to have all that stuff handy so that you're not scrambling when it comes time to work with your accountant on your taxes. I mentioned sales tax earlier. It's your responsibility to understand the sales tax laws, and if you have to, if your business is required to handle sales tax, you got to collect it, you've got to report it, you got to remit it to the state. Understanding the rules on this, you've got to file a form periodically. I think it's quarterly. Basically, you can learn all about this on the Connecticut Department of Revenue Services website. And my advice is just research this upfront, learn what the rules are, and just set a process in place where you're following the process, whether it's monthly or quarterly. And what I've heard from clients is sometimes you've got to file even if you don't have any revenue yet. You may have to file that you had no revenue and you don't owe any sales tax. So just research that up front and check that out. I'm going to move on to business and marketing plans. Any questions on the finance topics we just went through? All right. Business plans. This is a question that John and I spend a lot of time with our clients on. A lot of folks say we need a business plan. Well, what is a business plan? It's basically, I think about it as a living document. And that means that you're going to refine it over a period of time. It's not like you're going to set it in stone and never revisit it. But these are the things that you're going to often have in a business plan. And you can see all this information about your business and kind of what the key things are. We're going to talk in a second about different versions of a business plan, because a lot of times people think they've got to create this 50-page document and it's got to be a masterpiece novel. That's not necessarily the case if you're just starting out. A lot of times you really want to start with a simple business plan. And that's actually what we do with a lot of our clients is we start with what we have a one-page business plan and say, start with this, get your ideas on paper. And that's really what a business plan isn't designed to do up front, is to help you organize your thoughts and your goals and your objectives and how you're going to get there. So you could have a business plan you could have different versions of it. You could have a skinny down version, or you could have a very comprehensive version of a business plan. It really depends on what you're going to use it for. If you're going to be working with a lender or an investor to try to sell them on your business, it's going to be very robust. You're asking for money. You're trying to get people to invest in you and your business. It needs to be robust with all of the things I just mentioned on that previous page that answer a lot of their questions about why they want to invest in you. If you're going to be going into partners together, you may want to develop a business plan that you both worked on to better define your goals. Maybe you want to share it with employees. Maybe business partners that you have, if you're going to enter into somebody who's going to play a significant role, maybe they want to understand aspects of your business plan to do business with you. But most importantly, it's for you. It's a way for you to document what you want to get out of your business and what your objectives are. And it's good to put it on paper because it'll help clarify some key questions, things like who are your competitors, how you're going to differentiate. And it'll help you kind of get your goals documented. And as you're moving along and running your business, having a reference document to go back to and say, am I still aligned with my business plan goals that I set a few months ago? And it's a good idea to revisit this every 3 to 6 to 9 months, depending upon if things change, which is what we mean when we say it's a living, breathing document, because it can change. You could decide that you're going to go into these 4 product lines and maybe you decided to skinny it down to 2, or maybe the competition changed and that's going to cause you to reshape how you want to do things. A key aspect in doing a business plan is what's called a SWOT assessment, and all companies do this regardless of their size. And SWOT stands for the strengths, weaknesses, opportunities, and threats. And this graphic over on the right kind of helps you depict what you're trying to do. Strengths and weaknesses are more internally focused, looking at inside of your business to say, what do I do really well? And what are some blind spots in my business? What are some things that I need to do better and fill some gaps? in being successful. Opportunities and threats are more externally visible. What are the things that are out there in the marketplace that are opportunities for me to capitalize on and drive my business growth? Threats might be, what's the competition doing? Or are there things in the market that are causing my industry to go sideways and maybe it's not going to be as viable as I thought it might be 6 months ago? The key in preparing a SWOT assessment is over on the left-hand side here, being honest with yourself, honest with your weaknesses, honest with the threats, making sure that you're not going in with blinders on and thinking that everything is going to be, rosy and perfect. Having clarity on what's out in the market, and then revisiting this at least once or twice a year to see if anything has changed and anything would cause you to do anything differently with your business. Any questions on that topic? All right, we're almost at the end here. Marketing. So we haven't spent a lot of time talking about this yet, but this is a key thing in driving that sales engine that John talked about earlier. These are some key aspects in doing, thinking through a marketing plan. Any good business plan has got, a financial aspect and a marketing and sales aspect to that business plan, how you're going to generate revenue, how you're going to find customers, how you're going to build that connection with customers and keep them as customers and keep them coming back as repeat customers. And then expanding your target market. As John said earlier, your product or service is not going to sell yourself or sell it yourself. It's something you've got to do. So asking yourself that question, how you're going to differentiate from the competition and how you're going to sell your product and services to your clients. So finding clients, how do you do it? Well, there's these trial balloons here that are on this this graphic here. Not all of these are going to be right for your business. Some of them may not be even applicable, but some of them may be perfect. So there's different options that are out there. We've got a couple good webinars on our YouTube page, which describe our some marketing approaches. One of our mentors is an expert in the marketing field, and she's done some great sessions on this topic. But it's about finding what works for your business and your target customer, the best places to reach them, and the best methods to turn them into customers. So just to think of kind of putting this all together, we've talked about a lot of things in this section. We've talked about business planning and marketing and finance. It's really about kind of pulling it all together. And you can see at the bottom of this graphic, they've got the key questions, right? What are you trying to solve? What's the problem? How you're going to solve it? Why is your solution going to be better, right? That product definition and value proposition that John talked about earlier at the beginning of this. What's your target market? Who's your, what are their traits? How you're going to sell to them? How you're going to market to them? And kind of on the left-hand side, you can see this know, learn, adapt. This is a constant cycle. A lot of times when you're just starting out, you're going to be in the proof of concept phase, thinking through, does your product or service resonate? Does the price point resonate? What does the competition do? Using that feedback from your customers as a feedback loop to constantly be learning and thinking through what you may want to change, whether it's price point or it's some feature or how you reach your customer, using that feedback loop to really learn more. So the last thing we have here are just some tips and resources that we provide a lot of our clients. First and foremost, our website. You can go to our national website is score.org. Our chapter's website is greaterhartford.score.org. You can go to either of those. You can do three things there. You can find a mentor. You can take a workshop, much like this one. You can find on-demand webinars or read about webinars that are coming up. Or we have a resource library that's got a host of information that's out there. If you do decide to find a mentor, recommend just putting a specific question in about what you're looking for. That'll help our administrative team pair you up with the right mentor who's got the right background. If you're looking for financial help, you might come my way. If you're looking for marketing help, you're not going to come my way because I'm not a marketing expert. Another good website for Connecticut is business.ct.gov. You can find out all sorts of information and regulations about the state of Connecticut and doing business in our state. There's also some good information on consumer protection. This isn't really as applicable as it might have been a year or two ago, but the Treasury Department had a lot of good information about assistance for businesses, especially with the pandemic. Might not be as applicable right now, but there's some good information out there. We also have some good information on startup. There's a startup roadmap that's on the SCORE website. It's a lot more detailed than this 90-minute webinar, but there's some really good resources in there and some good instructional content. You could check that out. And then we have a broader program called Simple Steps that we've got on-demand webinars that you can go back and watch that goes into more detail in all of these topics than this hour and a half could cover. But that's out there as well on our website. And just to wrap up, it's not easy starting your own business. I've only been mentoring for 2 years, but I've been amazed at some of the progress that people have done. And it's been very inspiring to see what people have created. But I also know it's not easy. And I've learned that it's been very tough for people to do. Focusing on what you do best. You know your product and service, you know your customers, focusing on that, hiring the people to do the things that you don't know, like the legal and accounting things. Knowing your market, knowing your customers and your competition is so important, and constantly be using that information to course correct as you need to, learning and adapting. And then, reach out to SCORE for some help. That's what we're here for. We get up every day and our goal is to help small business owners. It's what we love to do. And if you need any help, you can find us. And I think that's the end of our presentation. So I am going to stop sharing here. We're about 1:15, so we're a little bit over here, but if anybody has any other questions, we can hang out for a few minutes. Any closing?
No questions, but thanks very much. That was a great presentation. Hi, John. Haven't seen you for quite a while. Anyway, I'm signing off. Thanks a lot.
Thanks.
Sure, I was muted.
you,
Good to see you.
All right. I'm not seeing any further questions, but appreciate everybody's attendance and engagement. Great questions and feedback. It's always nice when we can have a conversation with folks. And we wish you all the best of luck. And if you need anything, you know where to find us. Take care and enjoy the rest of your day.
Thank you.
Thank you. Goodbye.